As an investor or a trader, it's very important to understand current market sentiment. Over the past 24 hours, all of these memes have started popping up inside X/Twitter. The fear and greed index, it's dead. What about this? When we get a sell-off, traders are just melting. Hodlers or holders, investors, they're just so cool, and newbies are looking at it and saying, what the heck is going on? Let's check out these memes. This one is a favorite of a lot of influencers. They say, I'm out, I sold everything. What about CZ? He just recently came out and said literally 99% of his money is in BNB. Michael Saylor, I'm not selling. Well, definitely somebody's selling. Across the past 24 hours, we had literally $1.6 billion in liquidations, the vast majority being long liquidations. Literally, over 370,000 positions were liquidated. It's no wonder people feel like this poor little frog, oh God, and oh no, a margin call is incoming. But what I've shown you here, especially if you've done the profiting course, please just reach out and look to week 4, lesson 1. This is the hidden retail trade perfection trap. Comments like, it always works. Anything to do with emotion. Social media is all about emotion, and you've got to be really careful. If you're thinking about this and looking at the markets as some form of gambling activity, you're in a huge amount of trouble. Do not be retail. And thank you, Levlo Max. We definitely have one of the best communities on YouTube. You've probably seen a lot of these kind of memes just floating around. Look at this guy, oh my God, I miss my particular stock or crypto or whatever the heck it is being up. It's come down. What typically happens with retail trade perfection, people see the price come down and they say, oh God, you can't make money going long at spot in a downwards market and make money. Inside the profiting course, I prove this is absolutely, unequivocally rubbish. But retail trade perfection has people looking in the wrong direction. The truth is, and this is a skill that you must master, you can make money trading in any market, up or down, even consolidation, if you know what you're doing. And as a student of the CTKS method, I'm just assuming you've done the profiting course. A lot of people inside the crypto market at the start of this month would say there is no way on earth anybody could have ever predicted the total crypto market cap, the entire total crypto market cap could come down and be currently at 2.85 trillion. This is because retail trade perfection has everybody thinking up only. It can only go up. Not the case. Price always moves in a wave. And if you get caught in a wave downwards, you must prepare for negative volatility. Unfortunately, people don't prepare for negative volatility. That's literally, we're going to get a Lambo or we're going to work at McDonald's. This is retail trade perfection, RTP at its finest. If ever you see stuff like this is retail. Our community, when it goes red, we're excited, not because we're shorting. We don't short the market. We are experts in spot trading. Now, what does that mean? We'll buy at one level, and for us to make money, it must increase in value. That means we must time the market. Unfortunately, so many people don't time the market. They don't know intercorrelation, interconnection. They can't look through charts, and they get caught with something like this. It's very easy to do. You must be very disciplined. One thing that you need to understand, there are a lot of myths about hodlers, people who are investors. The vast majority of investors are simply retail traders. Now, what is a retail trader? A retail trader is somebody that sells when the price goes down and buys when the price goes up. Now, what does that look like? This is a perfect illustration of retail trade perfection. You must make sure that you stop thinking in a retail manner. In yesterday's video, I just asked for people to share their own rules, and Daniel, thank you very much, my friend. He shared one of his. My rule is never assume price can't go a lot lower than you anticipate. Price is typically negatively biased. It walks up the stairs and it takes the lift down. And the concept is you can always buy lower, especially in crypto, which is incredibly volatile. People will tell you there's no way at the start of the month anybody could have predicted that Bitcoin would be at 88,095 today. But this is just simply following the normalized negative price path that is published inside the service at the start of each month. What typically happens, people see a bit of negative price action and then they say, oh, everything is fine. You must assume the price is just literally moving in a wave all the time. It can come up, it can come down, and it can go flat. And you need to be capable of making money across all of those different particular positions. In yesterday's video, I asked our beloved global family to share some rules, some personal rules, and many thanks to Oscar, who shared a couple of rules with us as well. Rule number 1, if you get emotional, get up and reset before you continue. And rule number 2, abide by all CTKS rules. Thank you for sharing, my friend. And if you have other rules that you would like to share with our members, please do so. Together, we're stronger and smarter than we are individually. One thing just to keep in mind, these structural paths which come through Level 2 standard certification, so if you're not sure how to draw them, please go back and see L2 certification just towards the end. We can see on Doge, it's been following the normalized negative price path. This particular area was an area of structure. Down here is another area of structure. When we lost this area, we opened up a negative CTKS gap, which meant that we could come into this area very quickly. It did take a little bit longer to go there, but when it came down hard because that's what structure was pointing to. And I made sure recently over the past couple of days, I just pointed out that Doge had this particular problem in it. The difference between us and everybody else, we know where the true structure of the market is. And that is wildly important. Thank you also to Port Power, who said, I know opportunities and life reset daily. A great thing to keep in mind when things aren't working out for you. Always remember, life is always moving in a wave just like the markets do. Students, please make sure that you keep on marking up your cheat sheet. The cheat sheet is vitally important because it allows you to look through the charts. Now, what actually happened to Bitcoin and total crypto market cap? What happened was the VIX. The VIX had been basing and started to turn around and started to spike. A lot of people say it's because of the tariffs that are coming in. I'd like to share something really counterintuitive with you. The markets do not listen to the news. The markets do not care about the news. What this means is the news is irrelevant to financial markets. It may be relevant to you, it may be relevant to me, but as far as the markets are concerned, they couldn't give two hoots. Now, this is very liberating because what it actually means to you is that when you know how to do intercorrelation and interconnection, to look through and stack probabilities from multiple charts, you'll see where it's dangerous and where it's advantageous to get into the markets. And you won't be following the mainstream or mainstream media news. Please let me know in the comments, what do you understand by market and chart permission? It is an incredibly important concept. Literally, understanding it will change everything. And just by way of reference, this is in week 3. Over the past couple of days, the markets have been absolutely brutal. If you've been caught up in it, you've probably seen some pretty significant losses across the board. It is incredibly frustrating and very depressing to see things like this. This is why you can have a trading account and an investing account. When you have an investing account, you want this. You want the price to crater. because you want to get more of whatever that is that you want. But when you have a trading account, you're very selective when you stay in the market and when you get out. You must be capable of timing the market. Retail will say that you cannot time the market. Inside our community, we look at the cheat sheet and we understand what's going on across all of the different rows. We saw the VIX starting to base and starting to just kick up. That was our sign to pay a lot of attention and be very cautious. And if you heeded that signal, it's very important to keep your eye on market permission. Market permission is all about structural passes and structural failures. In yesterday's video, we were between here and we needed to look at the 94,574 and the 93,432. We broke negative, filled that CTKS gap, that negative gap, and we were propelled in a consolidation manner across that 91,487 for quite a period of time. And then we filled the next negative CTKS gap and then made our way because of structural failure down to the 86,101 level. You must be capable of reading structure. We know as Bitcoin goes, so too does the entire crypto market. But Bitcoin is structurally biased. So what do we need to look at? Yesterday we were up here. What are the levels that you need to be aware of today? The key levels to look at are the 89,600 and 86,101 levels. If we get across the 89,600, this is very bullish and we can make our way back up to the 91,951 level. If we start to lose the 86,101, just be aware that there is a lot of structural support. Remember this level, even though we came down very hard, we just flatlined and consolidated. These levels are incredibly important and we know them ahead of time. This is the world's only leading indicator of price. Crypto price movements are exponential. That means we must know where the safety nets are. It's not like the stock market where things move at a snail's pace. Well, often. Crypto is a completely different animal. You must know where the safety nets are and how price is interacting with those safety nets and those ceilings. And these are the most statistically significant resistance and support levels in existence. If we lose, under the bearish case, if we lose that 85,582, the 85,582 is the next level that you want to look at. If we lose that, the 81,845. Personally, these levels are just awesome. And I'm not talking about the levels, I'm talking about the price on Bitcoin. Bitcoin is definitely the new monetary system. Just like Michael Saylor said, it's all about stacking. And don't forget, when we look at the negative normalized price path, it's right here. So if Bitcoin just fills out the negative normalized price path, that's what it is, around that 84,600 mark. By the end of the month. Real investors would be enormously happy when the price comes down. That means they can grab more of whatever they want to grab more of. But as you saw in all those memes, people are not investors, they're emotional traders. And if your trading is emotional, you will get wrecked. That's why we have to make it unemotional. We need to know where the structural levels are and if we're getting passes or failures. Have a great day or night ahead, my friends. And Kate and I look forward to catching up with you again in the next video. Bye for now.